time frame with existing home sales coming out. They're expecting 4.07 million. We also have a final wholesale inventories that we are anticipating at 10 o'clock a.m. Eastern Standard Time. We were looking at the gap fill statistics. Tuesdays historically have been very good, but over the last 90 to 30 days, you can see here that we've gone to 50% probability, a coin flip, over the last 90 days, and then much less, a 17% probability for a full gap fill over the last 30 days. Now, what you will notice is that half gap fills have held up 67, 78, 84. 84% of our half gap fills fill on Tuesdays over the last 180 days. That's an incredible edge. Keeping that in mind, where would the half gap fill be at this exact moment? We still have 13 minutes here until the bell. Well, it would be down right around the 33. But we're opening up. I'm going to mark that. We're opening up outside of the 30 handle. So this is a very similar type of situation to what we had yesterday, actually. It's just on the other side. Actually, it's a gap up situation. Yesterday we were above the 30 handle, right? We knew that we were above that 30, so there was a lower probability for a fill. We ran into the half gap fill and then ripped, and we made a new high. And we have that possibility here today as well too. So when we're looking at this from the perspective of, yes, these are counter trends. These are counter trend longs into resistance. How far will they squeeze? And the markets are used to filling gaps from below. Those are the gaps that you're buying dips. We've been doing this for 9 weeks. We've been essentially going up. We've had to be very, very cautious of the gap up situations. This is one of them. It's a pro gap up and go above the 30 handle. We'll see if that remains true here by the time that we get into our open. But even if we did fall below the 30 handle, we're still going to be more than likely above the 20, which is still only a coin flip. The edge leads to the half gap fill. And it's a very similar type of day to yesterday. Could we bounce off the half and continue to grind higher up into these larger resistance levels? I think the structure of the gap fill supports that possibility. But there's also more evidence inside of our other leading indicators as well too. We have the dollar continuing to weaken. This is the 50% short that we were going into the overnight time frame with. It held. The euro once again tells us the truth. Isn't that interesting? We're falling back down into support. If there's that dollar weakness trade continuing, the indices will grind higher. If we start breaking through shorts, we start witnessing a bid inside of the dollar happening, we'd have to start to contemplate that possibility of the counter trend longs breaking. What about the financials? And the financials are still in longs. Nothing has broken them. Nothing has broken them. So everything above those 4807s is still bullish. And then there's the VIX. We went into the afternoon witnessing this 50% short defending. And what is going to be interesting with the VIX here is that below these 1870s, you could still make a case that the VIX is inside of a series of shorts, couldn't we? We can't confirm our new VIX support. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.